This is the luxury world. Get inspired with us today and tomorrow. The Rolex market of 2025 has become the subject of dramatic headlines, with phrases like sell-off, bubble burst, and price crash dominating the conversation. However, these narratives misrepresent the actual dynamics unfolding within the luxury watch space. What is currently taking place is not a traditional sell-off, but a structured and strategic recalibration, a return to market fundamentals following an unprecedented speculative boom. In this video brought to you by the Luxury World, we will explore what is truly happening beneath the surface. We will examine how Rolex is leveraging scarcity, certified pre-owned programs, and annual price increases to solidify its position in the luxury watch market. Make sure to subscribe to Luxury World for exclusive access to upcoming insights, curated content, and expert guidance to help elevate every step of your watch investment journey. To understand the nature of this shift, it is important to distinguish between two market behaviors. A crash involves panic-driven, indiscriminate selling, forcing prices below intrinsic or historical value. A correction, in contrast, represents a necessary pullback from unsustainable highs, cleansing the market of speculation and re-establishing more realistic valuation baselines. The current state of the Rolex market aligns more closely with the latter. From 2023 to 2025, prices across Rolex's most popular models have undergone a measurable yet controlled adjustment. According to the Watch Chart's Rolex Market Index, which monitors the performance of the brand's 30 most sought-after references, the average decline over the past 12 months has been only 2.1%. Far from being evidence of a crash, this figure underscores a disciplined correction, rooted in changing macroeconomic conditions and a shift in consumer behavior. Despite the cooling effect, several of Rolex's flagship models continue to command substantial premiums above their retail prices. The Daytona, for example, experienced a meteoric rise during the pandemic period, reaching secondary market highs of approximately $50,000 in 2022. While that figure has since recovered to around $37,000, a 26% decline from its peak, it still represents an astonishing 131% premium above the official retail price of $16,000. The Submariner date followed a similar pattern, climbing from $9,200 in 2020 to a peak of $18,500, before stabilizing around $13,500. This current price point maintains a 38% premium over its $9,800 retail value. Likewise, the GMT-Master II Pepsi peaked at $35,000 and has now settled near $23,000, still representing a 107% premium over its $11,100 retail price. These figures make one thing clear. While prices have adjusted downward from pandemic-era highs, the most iconic Rolex models remain significantly above retail. This suggests that demand at the retail level continues to exceed supply by a wide margin, and that enthusiasm for Rolex timepieces remains deeply rooted among buyers and collectors. The correction has not undermined the market's integrity. Instead, it has removed the speculative excess and restored a healthier foundation. It is equally important to recognize that Rolex is not merely reacting to market trends, it is actively shaping them. The brand has responded to the recalibration period with deliberate, strategic initiatives that not only reinforce its position, but also solidify long-term control over its value chain. These moves demonstrate a clear understanding of market forces and a long-term vision for preserving brand equity. One of the most significant developments has been the global introduction of the Certified Pre-Owned CPO program. This initiative allows Rolex to enter the secondary market through official channels, offering authenticated, factory-certified used watches via authorized dealers. These watches are priced at a premium, often 25% to 35% higher than comparable gray market models. With this program, Rolex has effectively created a new price floor in the secondary market. By legitimizing and controlling resale channels, the brand has minimized volatility and shielded values from drastic declines. This is not merely a retail strategy, it is a reassertion of dominance over the broader market ecosystem. Another strategic maneuver is the calculated use of product discontinuation to engineer scarcity. In 2025, Rolex quietly retired several unique models, most notably the Oyster Perpetual with a celebration dial. What was once a standard production model was instantly transformed into a collector's item. This move triggered a sharp surge in its market value, rising between 210% and 290% on the secondary market, even as other models cooled. Such discontinuities serve as deliberate mechanisms to create artificial scarcity, generate collector interest, and drive long-term value appreciation. In parallel, Rolex has continued its practice of annual retail price increases, typically in the range of 3% to 8%. While seemingly modest, these incremental hikes function as a ratchet mechanism, lifting the entire pricing structure year over year. For long-term collectors and investors, this systematic inflation reinforces value retention and discourages depreciation. It also sends a consistent signal to the market that Rolex watches are not static products, but appreciating assets backed by a resilient brand strategy. This policy also allows the brand to offset inflationary pressures without compromising prestige. Beyond Rolex's corporate maneuvers, the composition of the consumer base has also evolved. The speculative frenzy of the early 2020s gave rise to a short-lived flipping culture, where buyers acquired steel sports models purely for short-term profit. That era has now come to an end. The modern buyer is more discerning, strategic, and informed. Collections are being treated less like trophy cases and more like living portfolios. There is a growing trend of consolidating mid-tier models to fund the acquisition of a single grail piece, an approach that reflects a more sophisticated, long-term investment mindset. This evolution in consumer behavior has also reignited interest in vintage and neo-vintage Rolex models, especially from the 1980s and 1990s. These pieces, often overlooked during the height of speculation, now offer compelling value through unique design language, lower entry prices, and historical significance. In a maturing market, such models represent an attractive alternative to modern references that have become inaccessible or saturated. Access to Rolex's most desirable modern watches at retail has become even more elusive. For models such as the stainless steel Daytona, authorized dealers increasingly allocate inventory to their highest-spending VIP clients, those with extensive purchase histories often reaching six figures. This exclusivity creates a two-tier market, where only a select group is granted access to new inventory, while the majority are pushed toward the secondary market. It is no longer simply about having the funds, it is about having the purchasing history and brand loyalty to warrant allocation. Taken together, these developments reveal a market that is far from collapsing. Instead, it is transitioning into a more controlled, stable, and strategically governed ecosystem. The short-term volatility caused by the correction has cleared out speculative overreach and made way for a healthier long-term environment. Prices have reset, but demand remains intact. Strategic brand initiatives have fortified the market, and consumers have matured, shifting from impulsive flipping to informed collecting. The narrative of crisis has been replaced by a more accurate story of consolidation. Rolex is not losing control, it is tightening its grip. Through the CPO program, annual price increases, and product discontinuation strategies, the brand is exerting more influence than ever. Meanwhile, collectors are embracing a more thoughtful approach, one rooted in appreciation for craftsmanship, legacy, and enduring value. The market of 2025 is no longer defined by hype. It is defined by structure, strategy, and sophistication. The choice facing collectors today is not whether the market will rebound, it already has. The question is which piece will offer the best combination of stability, rarity, and future potential, an iconic Submariner now priced more accessibly, or a neo-vintage reference with character and untapped value. The landscape has shifted, and those who understand the signals will be best positioned for what lies ahead. What are your impressions on the Rolex topic we shared in this video? We would love to hear your perspective. Feel free to share your thoughts in the comments and give the video a thumbs up if you found it insightful. Do not forget to follow Luxury World for more curated content on fine timepieces and market insights. Thank you for watching, and we look forward to welcoming you again in our next video.